Ladies and gentlemen, welcome back to the Cryptonews Weekly Roundup. Your host here, Zahab and Rachel Wolfson, still in Argentina for me. Rachel, you are in, I believe, Paris right now?
Yes, I am in Paris. So bonjour, everybody.
Bonjour. We are buzzing as always, guys. Let's start with some price action. Last week it was a solo episode for me. Rachel, I missed you last week, and I did ask for some green on the board. We did not get green on the board. Almost everything is red. Actually, everything is red except for the stable coins, unfortunately. Bitcoin is at 90K and hit 94 even yesterday as we record on Thursday. Currently at 90K, down 2.6% on the week. Ethereum, the only coin that is slightly green on the week, currently sitting at 3,019 per ETH. XRP down 5% to 2 even. BNB down 4%. Solana down 7%. Right across the board. Not a great week, but c'est la vie. What can you do? Guys, very prediction markets heavy news docket this week. Rachel, Polymarket back to back in the news. Kick it off with their in-house trading desk that bets against their own users.
Yeah, Matt. So Polymarket is recruiting staff for an internal market making team that would trade against its own customers, mirroring a controversial feature already used by rival Kalshi that has drawn criticism and legal challenges. According to Bloomberg, the New York-based prediction market startup has approached traders, including sports bettors, to join the new unit. People familiar with the matter said. Polymarket declined to comment on the recruitment effort.
That's absolutely wild. Don't really know how you can get away with that, but looks like they are going to get away with it moving forward. Polymarket back in the news again. This sort of blew up on Twitter earlier this week. Paradigm co-founder Matt Huang has amplified research alleging that prediction markets behemoth Polymarkets may be inflating its reported trading volumes through a data aggregation error that actually causes double counting across most third-party analytics platforms. This again came out from Paradigm Research, suggesting that the issue affects public data sets and dashboards that rely on Polymarket's disclosed figures, potentially overseeing the platform's actual activity by 100%. That's absolutely wild. This Polymarket is currently a $10 billion plus startup, and a lot of VC money went into that. Don't know how they got that, and we still haven't figured out if that is true or not. Speaking of Polymarket, still in the news this week, MetaMask is joining the party, Rachel.
Yeah, Matt. So this is really interesting. MetaMask has integrated Polymarket, allowing users to trade real-world event outcomes. The integration adds one-tap funding from any EVM chain. Polymarket's rapid growth continues amid a potential $15 billion valuation.
Absolutely wild stuff. Again, the prediction markets news does not stop. Gemini is back in the news as well. The billionaire Winklevoss twins Gemini space station received a key nod from the U.S. Commodities Futures Trading Commission, also known as the CFTC, to launch its betting platform Gemini Titan to U.S. customers. The crypto exchange team announced on Wednesday that the designated contract market, also known as DCM license, will allow Gemini to begin offering simple yes or no questions event contracts, aka the thing you need to launch 99% of binary prediction markets in the form of yes or no. Absolutely wild stuff there. Okay, no more prediction markets for the docket, folks. Moving on to stablecoins. Euro stablecoin market in the news. Huge news here as they have doubled the year after MiCA went live.
Yeah, Matt, and I can also tell you that everybody here in Europe is talking about stablecoins, so it's no surprise that the Euro stablecoin market has doubled since MiCA's rollout, reaching roughly $680 million in market cap. Growth is concentrated in major issuers like yours, EURC and EURCV, with transaction volumes surging nearly ninefold. Public interest is rising across the EU, signaling growing adoption.
Yeah, well said there. This piece of news was very scary as I saw this a couple of minutes after it went live a couple of days ago. A massive 43,000 Bitcoin transfer flagged by Whale Alert on Sunday. It was not a sell-off, it was a settlement. Capital for 21, the Bitcoin native firm led by Jack Mallers, which listed on the NYSE a couple days ago on December 9th. The $3.9 billion transaction confirmed on chain represents the release of funds from escrow to the company's direct custody ahead of its public market open. CEO Jack Mallers moved to preempt liquidity fears immediately and said over 43,500 Bitcoin out of escrow and is now into our custody. Proof of reserve updates to follow. Great stuff there. More stablecoin news, Rachel. Tether gains regulatory recognition in Abu Dhabi.
Yeah, Abu Dhabi has been in the news a lot this week. So ADGM now recognizes USDT across multiple major blockchains for regulated use. Tether says the move highlights stablecoin's growing role in modern finance. The update comes as Binance also secures full ADGM authorization, boosting Abu Dhabi's crypto ambitions.
Yeah, that's great for Abu Dhabi, making moves as always. Okay, Stripe in the news this week. Most of the Stripe stablecoin news has been positive. This is no bueno. Stripe launched stablecoin payment processing with a 1.5% fee for USDC transfers that cost fractions of a cent on chain, sparking debate over pricing that critics call excessive and defenders justify as infrastructure abstraction. Critics immediately highlighted the stark disparity between Stripe's fees and the actual cost of blockchain transactions. Guys, if you send a transaction on their blockchain, it literally costs them pennies on the dollar, not even cents, and they are charging 1.5% fee. They're going to make money somehow, and this is the way they're going to make money. Moving forward, first time I think we talked about Malaysia on the weekly roundup, Rachel, and their Malaysia's crown prince launched a $121 million crypto treasury.
Yeah, so Malaysia's crown prince has formally stepped into the digital asset sector with new state-backed stablecoin initiative and a large crypto treasury plan, even as concerns grow over whether the global digital asset treasury boom has already entered a fragile phase. The rollout took place under the supervision of the country's regulated sandbox, which is overseen by both the Securities Commission and Bank Negara Malaysia to test financial innovations ranging from stablecoins to programmable payment systems. Very interesting news, and I can't wait to see how that turns out.
Well said. Moving forward, back on Rachel's homeland, the U.S. Commodities Future Trading Commission, the CFTC, has taken one of its biggest steps to date and bringing crypto into regulated finance, launching a pilot that lets Bitcoin, Ether, and USDC serve as collateral in derivatives markets. This is huge. Acting Chairman Caroline Pham announced the program in Washington, along with new guidance on tokenized collateral and the withdrawal of order rules that no longer align with the Genius Act. The pilot marks a huge shift in integrating digital assets into futures and swaps markets while giving regulators real-time visibility into how tokenized collateral performs. Huge news here. Rachel, last piece of news this week. This is sort of bad, but sort of good. Upbit is finally moving most of its user funds to cold storage after the $30 million hot wallet hack.
Yeah, so South Korea's largest crypto exchange, Upbit, is pushing almost all of its customer assets into cold storage after a major hack on its Solana hot wallet and one of the most aggressive security pivots yet by a big trading platform. Operator Do Namu said it will fit the share of user funds held in cold wallets to 99% and cut hot wallet exposure to effectively 0% after hackers stole 44.5 billion won, about $30 million from a connected wallet. The overhaul takes Upbit well beyond South Korea's Virtual Asset User Protection Act, which requires exchanges to keep at least 80% of customer deposits offline.
Well said, Rachel. Guys, this marks another episode of the Cryptonews Weekly Roundup. Thanks for tuning in. As always, hopefully next week we're going to have some green on the board as we get closer to the holiday season. We love you guys. Thanks for tuning in. As always, hammer that like button, hammer the subscribe button, and we will see you on the next one. Thank you and love you all. Ciao.
Thanks, Matt. See you guys next time. Bye.